The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 2nd, of 2019. The wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. You can always send me an email, steve@tfnn.com. Please, in that subject heading, put radio show question, and of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Happy New Year to you. Let's have a great 2019. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading up 62 points, 23,389 is the print. S&P is up 9. NASDAQ 100 up 50 points. That's about 0.8% to the upside. It's the semis that are on fire. They're up 1.5%, up 17 bucks. Meaning green across the board. Spot volatility index is off $1.26. She's printing out at 24.16. Gold's up $3. Silver 7 pennies. Light sweet crude 2 buckaroonies. To the upside, Amazon leading the charge dollar-wise at $44. Office property income trust, I'm going to guess something like that. Oh, up 274%. Hey, now that's not a bad way to start the new year. I don't know what's behind that, but Google is up $8. Chipotle up 11. Booking Holdings up 6. Wynn Resorts up about $7. Interesting. I think they were trading quite a bit lower based on some news out of China last night, but they're up nearly 7% out there. So into the downside, Tesla off $23. Intuitive Surgical down 10. ABIO Med, ABMD off $10. Essex Properties off 8. So we've got things to look at. Of course, I want to look at what you want to look at. The first question came in from Les J. Les writes in, let's see here. Hi, Steve. Happy New Year. Well, Happy New Year to you. If possible, can we discuss the TLT and the TBT and what tools I can use to buy and sell them? I'm now in TLT and have been long since November in 2018. Still in the trade today. I'll exit. So a number of different things out here. Thoughts on any indicators to trade these? So the interesting thing about the TBT and the TLT, Les, is for any ETF that you trade, it's always great to take a look at what is on the inside. So this happens to be TBT that I pulled up on my screen out here. You can do the same thing, and you probably have, and anyone out there should. And this just shows you what the daily holdings are inside of this. Now, this was as of Monday's close, as of December 31st out here. And whereas it is labeled as the 20-year plus Treasury, and it's made up of a whole lot of bonds. They happen to show here maturity dates for bonds that are falling off of the portfolio just between January and December of 2019. So you'll see that. But what we have identified as the easiest or best correlation between what the TBT and TLT are doing. TLT would be just the opposite. The TBT, by the way, is the short version. TLT, the long version. And if we look at use our correlation tool at the top out here, we've got the Treasury bonds. So I've got a different symbol out here so I can grab all of the continuous contracts, all the contracts as they expire, and done slightly different than a continuous contract out here. It's more stable with regard to going back and looking at long-term TAS market profiles. That's not what the question is, but get to the point, Steve-O. Hey, on the bottom panel, not the bottom, but panel number 2, you've got the TBT, so that's the ultra short, and on the very bottom panel is the 5-day correlation between the two instruments. You would expect for these to be non-directionally correlated or inverted out here, and you can see that it's perfect. So we would focus on the 30-year Treasury, at least I would, versus what's going on inside the TBT and the TLT. So that's the very first thing that I would do. Now, if you're trading this and you're taking a look at making decisions on what our not corporate bonds, but the 30-year bond is doing, you really should understand what this instrument is doing on the screens of not just you, not just us, not just the Utes out there, but the Utes inside of those that trade these in euros, in yen, and in pound sterling out here. Because in order for this trade, you're in TLT, for this to continue working, you want to see this working for all traders out there, not just those in the U.S. Well, we can see here, the left-hand panel of our screen, by the way, it's a daily time frame that we're looking at. You can see that price is trading above the top of its box, 143. 25, 30 seconds. You can see it's made a higher high today. We're almost trading at the highs today inside of bonds in trading in euros. We can see the same thing is true in pound sterling. So here's what you know and I know, Les. We know that traders in U.S. currency, traders in euros, traders in pound sterling, they're buyers. They're not seeing a top, not just yet at least. And whereas traders in bonds, you can see that this has been moving lower for the last 7, 8 days. They're really not the buyers out here at this stage of the game. That's not what and you want to make sure that you'd like to see everybody on the same page, singing from the same hymnal, so to speak, out here. Right now, you've got 3 out of the 4, so you're looking like you're in pretty decent shape out there. That's what this shows. You had mentioned you've been in this for a long period of time. Actually, let me do this here so that I can, because this was the March 2019 contract, but let me just trade this. Let me just change this out here. I'm looking at in dollars. And if we take a look at where this actually bottomed, it was in November of 2018 in the U.S., right? And I don't recall exactly when you got in. If we take a look at, and I'd ask this question, when do you think bonds in euros bottomed? Any idea? Let me go back here. In dollars, bonds in U.S. dollars, now I don't know the answer to this, but I'm asking it. Be careful asking a question that you don't know the answer to. In November 2018, where do you think bonds in euros bottomed? Well, the answer here is February in 2018. So they have been buyers. They have been looking to get out of euros into U.S. dollar convertible assets. It's why you see the U.S. dollar index so strong today. They're just simply one. If you're over in Europe and you got the yellow jackets, not the jazz band out there, of course they're the yellow vests and so on and so forth. You're like, I want out of Dodge, and out of Dodge is here inside of the U.S., whether it's treasuries or the U.S. dollar index. We'll finish answering Les's question when we get back from this break.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're taking a look at, in essence, the TBT, the TLT for less in Idaho, and he's asking, what tools would I suggest that he use in order to trade these? And unless it's the exact same tools that I use here, my charts are agnostic as to what's behind them. The tools are always going to be the same. So here, if you've been in this for a while, if we take a look at the 30-year Treasury, both on a daily, weekly, and monthly, we can go searching for its profiles out here. You'll see that price is above the daily, price is above the weekly, and you have a brand new monthly profile that just formed in essence today. And price is above that, and that is at 145 and 7/30 seconds. Ideally, you will see price stay above that. We've already looked at the correlation between those two. The reason why I say this is because if price gets back inside there, price could easily pull back into the 140 range. Right now, you're bullish on all time frames. Okay, so we've got that. If we take a look at the daily time frame out here using Stevie's other tools, one of the things that we can see is that if we take a look at our count from the low out here, this is the low of November, this is bonds in US dollars, you'll see that we are either at wave number 3 or wave number 7, letters C and G on my chart out there. Now, we know that at wave number 7, that's where you can see the biggest changes in trend out there. So all this means is be on your toes, be on your tippy toes at this stage, because it doesn't mean that Treasury bonds are going to make a detour out here. It's just where they can. In other words, if you were asking me, should I get into this today? The answer would be no. You wouldn't be doing that. You would be getting into it around when you did get into it. I don't recall the exact time frame, but certainly much sooner than when you get to potentially wave number 7. Price is moving higher, doing with less relative energy. It says it's just time to be cautious. But price is going to have to close below Stevie's green line in order for that caution to turn into something more than just that. And that's at the 145, just call 145 and a half out there would be about the price point to be at. Now, this is what the daily looks like. So it's really the same set of tools. I'm not seeing anything that suggests that you get out other than be cautious. From a weekly standpoint, we are likely going to be in week number 8 of the Tom DeMark setup, 9 count. Now, in week number 8 or week number 9 or week number 10, whichever one of those makes a high, that could be a significant high. Could be. but prices above resistance. That was the week of July 6, 2018 out there. So all these are just cautious sides, not time to start doing any high five, and you never high five until you're actually out of the trade. But don't get caught up in the thought process. Well, rates are going higher, or maybe they're going higher, or they're not. There's other reasons why people are buying U.S. Treasuries. All you have to do is go spend some time abroad. Go over into Europe and just hang out. Just go hang out at the Eiffel Tower and ask yourself this question. With the craziness that you think is going on here, let alone the craziness over there, they're tear gassing those people and other things. Where do you want your shekels? There's nothing wrong with the good old US of A. So that's kind of the long way about giving you an answer out there. But, hey, it is an answer. Now, Coda had said, hey, I like that multiple currency view. Can we look at the same thing in gold? And we must look at the same thing in gold. And here is the view of gold in dollars, left-hand panel. You can see what gold in euros is doing, moving higher. We can see what gold in pounds is doing, pound sterling, moving higher, making a new higher high today, as it did in dollars, as it did in euros, as it has in pound sterling. Not the case here in yen. Now, it's really all about currency. It's all about converting the instrument to the local currency, because let's face it, if gold is moving higher in yen too, then everybody is at the party having a jolly good old time. So this is what it looks like here, Coda, for you with regard to gold price in those currencies. Now, Ruby, you had kind of stepped in line. Ruby had asked if we could take a look at gasoline futures. And if we take a look at gasoline futures out here, this is what you're looking at. You're going to see that over the past couple of hours, in fact, between 10 and 11 o'clock, the gasoline futures, go fill up your car now. They moved higher. But the question is, what are they doing out here? The problem is that you and I don't really have much data, any data, enough data, to really make any kind of conclusion on a daily time frame chart, or certainly a weekly time frame chart out here. Prices below the bottom of their profiles. Let's assume that price is headed higher. The price target that I would be looking at, Ruby, would be the bottom of the weekly profile at the 1.421 out there. That's what I would be looking at. You're at 136 and change. I don't really see anything else out here that I can assist you with, other than in essence in looking at this chart. So I see an A to B equals CD that has completed or is in the process of completing. That's on the 4-hour time frame chart. If we take a look at it, let's just go ahead and explode this up a little bit. And if we take a look at the A point out here, you and I, we'd use this low from about 1,800 hours. That's on December 25th. That was on Christmas. We would use as our B point the 1,400-hour time frame on the 26th, and the retracement or C point was earlier today. That was at 2 o'clock in the morning. So you've got the 1-to-1 A to B equals CD, but this is a wide-ranging bar on a 4-hour time frame, and that it could be the end of the move, not likely to be the end of the move, and this would say the 141-ish area would be next up on its price target using the AB equals CD price projection tool. That's brought to you by Progressive. I had to really go out and talk to the guys at Progressive and try to, they have funny enough ads out there. They try to be. Again, of course, nothing could possibly be better than the ad. Of course, this is a very biased opinion out there. The ad where the coach is talking to the football team. You already know which one I'm going to say, don't you? Talking to the football team, and getting them all geared up, and, we don't quit, right? Unless it's cable. I love that commercial. I could just play that one nonstop, and Stevie would be a happy camper. We got a question out here from Eddie. Eddie writes in and is asking about the Qs. Just by the fact that we reversed from such lows on all the major indices, do we think we bottomed, or is this a fake out? With further window dressing going on, does the move show market resilience? Yeah, sure, all those types of things out there. When everybody's bearish, we go up, and vice versa. Happy New Year. Happy New Year to you as well. Well, so you're asking questions about the market and, what is it doing, right? So the answer to that question is blowing in the wind. What we've done thus far. How do I best frame this. Let me show you what I really think is going on, and where the sphincter muscle of the bulls probably is something to be paying attention to out here. And that's going to be by taking a look at the New York Stock Exchange. So the New York Stock Exchange, which was even though it was down earlier, it had enough advancing versus declining issues to actually push its advanced decline oscillator reading up higher. And you can see we're well above zero. We talked about this on Friday. It was really important for today for it to also stay above zero. Now it's only 126, so I don't know what it's going to look like at 4. But I haven't told you where I think it's going. And it was a strategic way of me waiting and making sure you come back after this commercial break out there. Let's see if we're going to hear about you. You don't quit unless it's cable. Steve Rhodes with TFNN. We'll be right back. The secret to being successful in trading and investing is to have an untiring, undying, and unquenchable thirst for knowledge. There are certain situations where you can absolutely understand what the next move of the buyers and sellers is likely to be, or what I like to call a competitive advantage. Hi, I'm Steve Rhodes, the #1 market timer for the S&P 500 in bonds, and on Tuesday, January 8th, I'm going to teach subscribers of Mastering Probability how to use Tom DeMark's setup 9-count and trend lines, a tool that called for a change in trend at 3:30 in the morning on the day that generated the Dow's largest daily point gain in history. If you're looking for a competitive edge, then now is the time to take advantage of my risk-free 30-day money-back guarantee trial for my daily newsletter service, Mastering Probability, which will provide you with immediate access to this live workshop, which will be archived on your members page for the next 30 days. You have nothing to lose and everything to gain. Sign up today at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're trying to answer the question for Eddie, and basically, if I were to summarize Eddie's question, his question was, hey, looks like buying a dip is back in style out there. And if we take a look at this morning's action inside the equity futures contracts out here, what we're going to see is the week indice, Russell 2000, actually is the one that generated the most, let's call it the of the four, the more bullish of the messages, meaning that price was only able to push itself down to Stevie's red line. That's price at 1325.80. It's a level of support. And it has moved up off that line rather nicely ever since. Now, what I mean by that, and I'll get back to my other chart out here in a moment, is if we take a look at the NQ, which in essence is what Eddie is asking about, what we're going to see is that price was able to push itself well below Stevie's red line. But this is a daily time frame chart, and this means it's an end of day chart out there. But just in trying to keep things in perspective, the weaker of the indices, so to speak, the Russell, really just kind of went right down to support, tested it, and said, sayonara, baby. Now, what I think it is that you've got to watch for, that I've got to watch for, that we've all got to watch for out here, is we're taking a look at the New York Stock Exchange Advanced Decline Oscillator. And look, if you want to learn about this, I've got a workshop coming up next Tuesday. We're going to spend time on this, the time to mark setup, 9 count, and a few other things out there. But here, we take a look at this Advanced Decline Oscillator reading, difference between two exponential moving averages, 19 and 39. One of the things that you and I are going to be focused on, because it works so well, and certainly I'm just showing you right now just 2018 as a time frame, and you're going to see red arrows at peaks on a closing basis inside the New York Stock Exchange. You're going to see 1 yellow arrow, and you're going to see 4 red arrows. They're all referring to the Advanced Decline Oscillator reading at the bottom panel of the chart. And this is what I call the plus 150 failure pattern out there. Yeah, that's what I'm referring to it as. Why? Well, because when you get above 150, it's not a guarantee, but it's pretty close to a guarantee. It's one of those kind of guarantees where I guarantee it, but past results not equal future. Well, you know what I mean out there. And in this case here, though, and if you can close above 150, it, generally speaking, boy, am I qualifying this or what? Means you're going to see higher prices in the future. Does not mean really tomorrow. Likewise, though, if it gets right up to that 150 area and it turns down, remember, this is end of day. We're on a line chart out here, so I'm just showing you the end of day out here. So some of these others may have actually been plus 150 failures, like June 6th as an example. But I'm just using the ones that are so visibly identifiable for you that when you get up, so it will the Advanced Decline Oscillator reading on a closing basis close above plus 150? Or does it start to turn back down, as it did on the trading session or right around the trading day of February 26th, as it did right around the trading session of March the 9th, March the 9th, March the 12th out there, March 9th, I believe it was, as it did out here, again, a plus 150 failure on April 18th. Now, this was a little tricky one. This little booger, November the 7th, did close above 150. And nonetheless, though, it went ahead, price moved to the downside. But that's more of the, it's not typically what you see out there. But if you do see a turnaround, Eddie, inside the New York Stock Exchange, then what you want to prepare for is some type of decline inside of the NDX 100, but certainly inside the New York Stock Exchange. So I think that's what it is that you would watch. Specifically with regard to the Qs, let's say that simultaneously, 2 things happen at one time out there. Well, inside the Qs, what you would be watching for is really inside the equity futures contract, and it would be a whopper of a move to the upside. And that is the top of its daily profile. That's at 66.89.68. And that's a big move out there. And so I scratch my head and say, probably not going to happen. Instead, what's more likely to happen, to be able to give you the answer about the resiliency of this market, is whether or not the actual Dow equity futures contract can get up and surpass the top of its daily profile. And that's a 23,674, or 23,373. Now, look, based on today and the overnight action out there, it could do that. It could do that today. It could do it in a heartbeat. And if price is able to close above that, which is a bearishly structured box out there, and then simultaneously you've got the New York Stock Exchange Advanced Decline Oscillator reading getting above plus 150, well, that would be a feather in the cap for the bulls. Look, there's no doubt, and this is a tricky, it is really it's got Stevie scratching his head out there, because ordinarily you and I would just simply look at the NQs out here as an example. We can just go anywhere we want, but we could certainly, since you had asked about this, we would say, hey, Steve-O, when do you buy the D point of an A to B equals CD to the downside? And we would say, well, you do it when the cavalry arrives. As prices moving down towards that 1-to-1 or 1-to-1.272 or 1-to-1.618 or 1-to-2. I don't have that on here right now, but that's what we would say. We would write that in a textbook. It's probably written in several textbooks that you've actually read out there. And in this case here, the actual buy the D point came in right here on that beautiful day of December 26th. That's a bullish signal inside the NQ. It's bullish signals all over the board out there. So in theory, what we ought to see is one of 4 results inside of the A to B equals CD pattern out there. Because HM would say, look, well, it probably wasn't HM. Probably with regard to one of the 4 or 5, that probably came from LP, Larry Pesavento. I'm going to go, actually, it was Larry in he was having tea, I believe, with Leonardo da Fibonacci. I know he always talks about those movie actors out there, but I'm thinking he actually was around when Leonardo was, maybe he was in Italy, probably, right? So probably had to have a little, maybe, hey, I know, maybe they weren't having tea or coffee. Hey, you kind of catch my drift out there. Yeah, it probably was. It was a nice Tuscan wine. That's what I'm thinking. But look, the reality is what you should see inside the NQ is you at least ought to get the 0.382 retracement of that A to D, not forgetting B and C out here, move, which is around 65.63. So looks good, but you've got to be on guard out here. And I think you've got to be on guard for that plus 150 level inside the New York Stock Exchange. By the way, the reading as we speak right now is 125 and change out there. So it could even get up there today. Again, closing above plus 150. Well, it's a fairly decent bullish signal out there. An example of one of those, you could go back into the time frame November, did I say November? November in 2016. You got above plus 150, moved sideways to slightly lower, just slightly lower for a few days before price went ahead and took off to the upside. And you did it again, in essence, back right around December the 7th. And that's typically the way that those plus 150, above 150 levels work. This yellow line is don't know why it was there, but it's not there anymore. So, Eddie, thanks for writing in. I hope that answers your question in a logical way out there. At least you get to see Stevie's logic and the wheels turning, sometimes spinning. No other questions, so the request line is open. Steve at TFNN.com, 877-927-6648. Dow is up a good 27 points. S&P's up 70 right now.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot range from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 34. S&P is up 7. And now that Preston Tucker has joined us, he wants to take a look, light sweet crude out there. And so let's go take a look at it. And as we take a look at its hourly, 4-hour, daily, and weekly set of profiles out here, what we're going to, I don't know what everybody's making all the fuss for light sweet crude against CNBC, jumping 3% or this or that. Tucker, all that light sweet crude is doing. Now, look, it's got a solid floor out there. When I say a solid floor, is that and I know, and Dave Mason knows, that at 44.53, it's a pretty solid bottom. Why? Because it's been tested for the last 2, 4, 5 trading sessions, ever since the actual profile formed. And we knew that it was forming because that little orange bar on the trading day of December 26th out there. So that set of profiles was very helpful in providing you and I with support and or resistance. Now, the resistance area here has really been the center of its profile, the point of control, the place where both buyers and sellers believe there's fair value. That price, by the way, is 46.69. We're trading at 46.62. If the question is, has light sweet crude broken out, ready to move higher? I can't say that because in the daily time frame, what you and I know is that 48.86, the top of its profile out there, is most certainly resistant. So I don't see a whole heck of a lot here. If you wanted to buy light sweet crude, you would go ahead and you would take a shot at it at 44.53. But you would also recognize that it's a short-term trade, or would appear to be a short-term trade, and you'd be looking to exit right around where price is trading right now. It doesn't mean price won't trade up to 48.86. And the box is just slightly bearish in connotation, meaning that center line is slightly closer to the top, but not enough that I'm just going to almost say that it's fairly balanced here. So, Tuck, that's what I see when I look at light sweet crude. The chart hasn't generated a golden golden bar out there, so we don't have a new weekly profile. And if light sweet crude closes below 44.53, yeah, it won't be below, let's say, the low from back here on December the 24th and December 26th, but most certainly those lows would be tested and probably head much lower. So that's what I see when I take a look at light sweet crude. I hope that that helps you out. So if we take a look, see, Alex has written in here, keep those cards and letters rolling, folks. Just makes things much easier. Alex writes in and says, does the consolidation mean no new highs in 2019? No. No, no, it cannot mean that whatsoever. Now, what Alex is referring to out here is he is referring to this. Where are we gonna do it? What are we gonna do out here? How are we gonna show this? Gonna show this here. We're gonna show this here. More, and that's the Dow. Let's do this here. Since we kind of covered New York Stock Exchange and so forth, the heck happened there? Something moved on my charts, I think. Let me come back here to the Dow. Let's just start with a clean chart out here, somewhat clean. This looks better. I'll have to go back and clean up that other chart. So the consolidation that Alex is talking about, hey, Tucker, maybe you were talking about it too, is the price point of 23. You really got two levels out here. I don't know whether it's the low of February 9th that we're going to get technically exact 23,360. Possible. Maybe it's the exact low of April the 2nd. That's 23,344. So you'll see those are the red numbers on my screen. We're 23,373. So we're slightly above both. If the Dow closes above both, there's a couple different possible meanings out here. One of those meanings is that it could have been a false break to the downside. Look, the Dow had a false break to the upside. When it closed over its January, we're looking at a daily time frame chart, on January 26th, 2018, at 26,616.71 was really what we're considering to be the top of the consolidation. Because when we put this on a monthly time frame, it just is very clear. But there were a few days, for example, when it looked like the market was going to bust out and just simply zoom higher out there. You remember the 34,000 or 37,040 level that Stevie's got as another target here in the Dow to the upside. We're not talking about that today because we can't talk about that today because it's not relevant today because prices in essence at or below the bottom of the consolidation. But I just want to make the point that you can break above, as it did out here, the Dow being it, above the consolidation. It needs to stay above that level for a further breakout move to sustain itself. If you come back inside the range, right? Tom uses that phrase, the range. Well, this is the range inside it out. It's a doozy out here, 3,000 plus point range out here. So, Alex, if price does close back inside the consolidation area, this could have been a false break to the downside. Just like we looked at, whoever the we was, Eddie and I looked at the NQ and said, look, if you were going to buy the D point, it didn't get any easier than that. Same is true with the Dow with regard to its A to B equals CD to the downside. And now the question is, can price close above this level? Now, if it does it mean it's out of the woods? And Stevie would say, not so fast. Because what we would look at, just as a trend line, there's a couple that we can draw, but I would draw this one here. I would just use the bottom from October 29th, and I would attach it to the actual low on December 10th. And then just to make it easier to draw the line, I'll just simply go ahead and extend that line to the right out there. And that is what I would consider to be another level of potential resistance. If price is able to close above that, then it's game on. Now, remember, game on is simply that this too is a Gartley buy pattern. And inside a Gartley buy pattern, there is always 5 different potential outcomes. The ultimate outcome is that it turns out to be an A to B equals CD to the upside. So if price is able to take on that diagonal resistance level out there, which, by the way, in essence, it acted as resistance on the 18th and the 19th of December, that also happens to be right around the general vicinity of the 0.382 retracement of the A to D area out there. So 23,713. So does it mean that we can't go back to the highs? We have to take this one step at a time, one day at a time. Our role, yours and mine, is to, in essence, start with a clean sheet. Yeah, I know I've got some tools out here, but in essence, open your mind up to the new possibilities and new information. And you and I, we're technical traders out there, all of us. Well, I mean, you might not. You might just listen to the show because you just are like, hey, sometimes this guy's funny. Or you might think he's funny in different ways out there, but hopefully provide you with some information to give you an idea as to where price is headed to, or what needs to be done next out there as price is trying to climb the wall. Now, Alex, let's face it. If today the Dow closes under 23,360, 23,344, you're going to have another failure at the bottom of that consolidation. And as long as price continues to fail at the bottom of the consolidation, before things can go higher, they could go lower. And when we say lower, we say 20,166. Stevie Rhodes, TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So on Monday's action, you saw the spot volatility index close down by minus 10.3%. That gives it another one of those green arrows out there. Green arrow is a acceleration arrow. Typically, when you see the spot volatility index close lower by something minus 10% or lower, it's an initiation move. And so that has worked out. That's the follow through there. By the way, inside the S&P 500 out here, you know, what are we going to target for its price area where it might head to? Really the top of that profile. We looked at the top, by the way, of the Dow. The top inside the ES Mini is 2585 out there. I would say that at today's close, should the Dow close inside the consolidation level, that's what we looked at during the last segment out there, then there's a pretty good chance we're going to see, and this is what you would be watching for in overnight action, would be, okay, if you can do that, What does the Dow Equity Futures contract do? Is it gets that 23,674. Inside the S-Mini would be 25.85. I think it's going to would be the YM, the Dow Equity Futures contract. That would be the first up there. They can't guarantee that. So in summary, we're watching that. We're watching the New York Stock Exchange, its advanced decline line, what happens as it gets to the plus 150 reading. That could be just simply over the next couple of days. Spot volatility index, that looks like it's headed for its 50-day exponential moving average. That's at 22.42 out there, trading at 24.10 as we speak right now, still above every single futures contract out there. So been a nice bounce. Steve is going to call it what it is right now. I don't know what to call it. It's either a major low or we just have a counter trend rally. What we really have is both as we speak right now. Below the 26, that's a major low because that completed Gartley buy pattern across the board. But what's taking place as we speak right now, you haven't even gotten to level number 1, the 0.382 retracement of that A to D leg. So right now, it's just a counter trend rally. A heck of one. But that's Stevie's. Hey, folks, stay tuned. Your favorite polar bear, fresh back from vacation out there. He's up next. Tom O'Brien, 3 to 5. Hey, I'll be back with you tomorrow morning at 8 o'clock. I can't do the 1 o'clock, so I'll do it 8 to 9. Join me then.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.